Hi everyone, my name is Kenneth. Welcome to another episode of our YouTube channel. The most asked question today has to be, are rates going to continue to drop? Now clients have been asking that while they are holding off their refinancing and even some new purchase loans. Today we're going to use facts and figures and news we have gathered to present these and hopefully come to a conclusion on whether the rates are continuing to drop. So to start with, let's take a look at what's happened with Sibor over the past 2 years. From October 2017, let's take a look at it. It starts at 1% and it has slowly crept up to 1.87% over 2 years. And let's zoom in over the 3-month period to have a better indication of what's going on in the last 3 months. Now in this last 3 months, the numbers tell a different story. It's been coming down, and 2 arrows I put in this chart shows the 2 cuts that the Federal Reserve has done, 25 basis points each time, totaling to 0.5%. Now, whilst this chart shows that the Sibor in Singapore has dropped, but every time a 0.25% drop, a cut from US has only triggered a 0.05% in Singapore. So in total, 0.5% has been cut from the US, but it only triggered a 0.01%. What has happened in the past few years if you contrast between the US and Singapore rate movements? Now, since the Federal Reserve has normalized their policy in 2015, there have been 9 hikes. And prior to that, between the years of 2010 and 2014, rates have maintained at about 0.4% for them. Now it is about 2%. As for Singapore, in the years creeping up till 2018, we have seen fixed rates as high as 2.68%. Now, since then, it's dropped down to a low of 1.88%. Whilst this may seem like a 0.8 cut is significant, we believe that as Sibor has maintained at 1.87, fixed rates are not likely to go below that. So unless Sibor drops further, we do not see any change in the rates, now normalized at 1.88%. Now, what is going to happen? In the month of August, Channel News Asia has announced that there's a possibility of a tightening of monetary policy by MAS. Now, if MAS were to ease our monetary policy, because we have had the slowest pace in a decade in Q2 of 2019, then the appreciation of Singapore dollar will slow down, and that translates to a rate increase. Now, what happens? Funds flow into Singapore when currency is strong and thus depressing interest rates. Now, when the currency is weakened, then funds flow out and thus rates will increase. Well, there are a lot of variables that help or discourage the change in rates, and it's not simple formula to go so straightforward like calculating a Sibor or just seeing whether the US rates and Singapore rates are moving in tandem. So what happened is that I tell my clients, home loan is for a long-term strategy. Some years you win more, some years you win less, but you win most if you always keep your rates to the lowest possible case. Now this sounds like a no-brainer, but maybe if I translate this into an example for you. A recent client has a loan of $2 million and his home interest rate has been hovering between 2.6 to 2.7%. He has held off his refinancing because he's hoping that the rates will drop further from 1.88 to maybe say 1.7%. So what happens? He's paying extra of $7,000 to $8,000 a year because of his current interest rate. And if rates were to drop a 0.05 or 0.1 further, he's likely going to save around another $1,000 or $2,000. So get this, he's paying extra $7,000 to $8,000 whilst waiting to save a $1,000 to $2,000. The longer he holds on the decision to refinance, the more he'll pay. So let's say 3 months from now, rates really drop to 1.7%. He will have spent an extra $2,000 to $3,000 on interest. While getting the new rate, he will save $2,000 to $3,000 over the next 2 years. So the point here is, if rates don't drop within the next 3 months, he's likely to spend a lot more money, basically $2,000 to $3,000 every quarter for his interest while waiting for rates to drop. In conclusion, we are still advising clients to refinance when the time is up for refinancing, instead of waiting for the lowest possible rate, because you are being charged a much higher interest whilst you're waiting for the rates to continue to drop. Waiting for rates to drop is a speculation, but the reality is you're going to pay a lot more interest whilst you're waiting. So it could possibly mean that it's a zero-sum game, or you stand to lose if rates don't drop as fast as you would hope for. So it's not exactly a simple math. So do contact us at the following number or email address so that we can compute for you and have a more in-depth dialogue on why we are advocating for the refinance of rates if you are paying exorbitant amount at the moment. Till next time, see you.